Hey Bowtie Nation, Joseph Hogue here. Thank you for joining us for another one of these market updates coming to you 9 a.m. every Monday morning. Get you ready for the week, all the news that you need to follow. Got a great topic for you this week as well as that market update. You know, if you listen to YouTube, all you hear about these days is the collapse, the economic collapse in China, how the world's second largest economy is going to lead us all into a depression. I'm actually preparing a video response to that idea, to the fear mongering out there, but don't want you to think that everything is rainbows and unicorns, right? In fact, we could be heading towards a global economic crisis, but it's not coming from China. European countries actually are facing an energy crisis, an energy emergency like we haven't seen in decades, really since the 70s. It's only going to get worse over the next 5 months into the winter, and it will slow down the global economy. It will push us into a global recession. So that's what we want to talk about today, how bad it could get, where that's coming from, where those problems are coming from, and what it means for you as an investor. So we're going to talk about that. Stick around though, because after that we'll be covering our weekly Monday market update, giving you the stocks I'm watching this week, the economic news coming out, and how to prepare for the week. I'm going to highlight the stocks I'm watching this week, how I'm investing. But if you want to see the 5 stocks that are the biggest stocks in my portfolio, really my forever stocks that I'm buying no matter what, check out the link I'll leave in the description below. It's a free report I put together with the Motley Fool, the 5 forever stocks that I'm buying for that growth over the next 10, even 20 years. It's completely free, no obligation. You just go through that link, put in your email address, and I'll send you that free email report absolutely free. I do want to get to that topic though, because this could be the next shoe to drop. You know, the economy globally and here in the US is already weakening. This energy crisis in Europe is going to be the thing that slows it down enough to push us into a recession and send stock prices even lower. What's happening here is, against sanctions for its invasion of Ukraine, Russia is weaponizing its energy production to bring Europe to its knees. Russia recently said that the supply of a Nord Stream 1 pipeline, the largest natural gas pipeline in Europe, would remain shut indefinitely after it had, maintenance issues caused a temporary shutdown last month. Basically, they said they were going to shut down for a few days to fix the pipeline. Then they came out and said it would be indefinitely shut. This and other supply reductions have led the price of natural gas across Europe, across the EU, to jump 350% this year. So you see here's a chart of the European gas prices. In January through February, before that Ukraine invasion, they were around 75 euros per megawatt hour. Now, jumping all the way to 350 there in August, have come down a little bit, but are still upwards of 275 euros per megawatt hour. And this is having a huge effect on the European economy, really the intended effect on the economy that Russia intended to by weaponizing this natural gas. And Germany is critical here. Okay, not only is it the industrial powerhouse of the EU, but it's partnered with Russia Energy for more than 50 years. So it's really pretty much completely dependent on those flows of natural gas to run its industries, its factories, as well as home heating, right? The CEO of utility giant Uniper actually recently warned that the worst was yet to come. Gas prices would likely move higher. And if you just want to see where this is going, the average temperature in Munich today is still around 45 degrees Fahrenheit. Okay, but that's going to drop to 25 degrees Fahrenheit by December and is going to remain there until March. Okay, this is really why I've been talking about on the channel lately that that invasion of Ukraine and the negotiations that we're all hoping to get someday to bring that to an end, they are not likely to come until at least January or February. Okay, because that is Russia's playing card. Those energy supplies to Europe is Russia's playing card in those negotiations. It knows as long as it has that playing card, its negotiations are strong because Europe is going to be kind of pressuring Ukraine to accept some kind of an offer, some kind of an occupation, or something that ends this conflict and gives Russia the upper hand. That playing card is really strengthening through the winter as it gets colder and colder in the EU. And like I said earlier, if you watch YouTube, all you hear about these days is the economic crisis in China, how that's going to be the next shoe to drop. A few outside the EU are actually even talking about this, but but this will be the next catalyst, and probably the catalyst that sends us into a global economic recession. Okay, Europe's largest aluminum producer was actually just last week, joining a long list of other producers, other factories, and those in the industrial space to announce a 20% plus cut to production due to high energy costs. Okay, so you've got these high natural gas costs, these high oil costs, really weighing on industrial users, factories, manufacturing. They are cutting back on their production. So what do you think that's going to do to the economy? Germany and other countries are already proposing rationing energy usage, especially for factories during the winter. As they get very low supplies of energy, of natural gas through the winter, you can't turn off the home heating, right? You can't let people freeze to death. So they're going to be rationing industrial users and factories throughout the winter. That is going to destroy the economy. A 15% reduction in gas usage, a proposal by the Dutch government, would plunge the EU economy and really the rest of the world into a recession. And to give you an idea of how bad this has already gotten, Germany has already nationalized several of the oil refineries owned by Russian companies like Rosneft. France is talking, okay, this is crazy. France is talking about relaxing the radiation limits on workers at nuclear power plants to be able to get those power plants online before winter. So yeah, I'm sure that's going to work out really well for those workers. Now, to give you an idea of how this is affecting stocks, the Vanguard European Stock ETF, that's the ticker VGK, has plunged 26% so far this year. That's underperforming the S&P 500, so those 500 largest companies here in the US, by more than 15%, right? And it's likely to fall further. But it's not just those local stocks that are going to suffer, okay? Combined, the $15 trillion EU economy makes it the third largest after the US and China. And really, it's 18% of the global economy. And we are going to see that slow down. The IMF has already downgraded its global economic growth to 2.9% for 2023 for next year. It's already downgraded its growth for the EU, and I still think that's overly optimistic. So how you prepare for this? I think that recent rebound in stocks is going to be proven to be just another bear market rally as stocks head lower. Not only do you have the Fed increasing interest rates this week and slowing down the economy in the US, already seen a lot of evidence that the US economy is slowing, but that energy crisis in Europe is only going to get worse. It's only going to slow down the global economy even further, and I think that's going to weigh on stocks as well as earnings. So I still say you hold more than usual you would in cash. I've actually got 20, 25, 30% of my portfolio in cash right now, really just waiting for those better opportunities in stocks, later on this year.